Hey guys, this is Adam from dodjit.com and this is your weekly video briefing. Now, what happened last week was basically a stock massacre. We did touch our lows, our prior lows on Monday, and what I did expect, I was hoping that we were going to retrace according to this Fibonacci level. If we look closely on the chart, we can see that this Fibonacci level, if we look at the 50% retracement level, it's actually in line with our prior support level, which is roughly around here. So what I was expecting to receive some type of bounce off our prior lows, our November lows. We did receive a bounce on Tuesday, we headed higher, the markets just couldn't sustain the rally, and what happened is basically on Wednesday, Thursday and then Friday they just completely sold off. If we look carefully, let's just erase this Fibonacci level. If we look carefully also at the chart, we can also see, look at this volume. Look at the volume over here. So things don't look good at the moment. If we look carefully also, and we can see that our prior lows managed to find support at 741.02. Now if we look at Friday's session, look at this. Look at this. The last price, the closing price of Friday's session was 735 points. So basically what happened is that we closed below our prior lows. Now this isn't a good thing. This isn't a good thing also for confidence in the markets. If we look very carefully, we can see we're not receiving major selling pressure, but we are drifting lower. If we just plot some trend lines, we can see that we're basically in this now, in this channel going down like this, and basically what's happening is we are receiving a lot of bearish days, but the selling pressure isn't intensifying, even though we did close Friday's session below our prior lows. So this is something that we've got to take into consideration. Now the problem is, let me just flip over to a weekly chart. What we can see is basically that we have broken all our support levels. If you look at this. There's no support. If we're going back now a couple of years, no support. And if we look even further back, we can see that now we're basically breaking our 2002 lowest levels. So at the moment it doesn't look good. We've also got this large channel that let's just erase that for a sec. We've also got this large channel that we're in at the moment, which could act as support, but look how far down we can go. We might even be heading to the 650 level. So this is something that we've got to take into consideration. We've got this large channel at the moment like that. Now what I'm going to do at the moment, I'm going to just speculate a little bit. What's probably going to happen is the markets we might receive a slight bounce today, or we might head slightly lower. I don't expect to see a major sell-off unless some news event's going to come out, or some horrifying, I don't know, economic piece of data that's going to come out from the US. It's going to spark a major sell-off. In addition, we've got to take into consideration that we've got the NFP results coming out on Friday. So what we could see, if we don't see today or tomorrow a major sell-off in the US markets, we could see some consolidation around our current levels up until the non-farm payrolls. So that's something that we've got to take into consideration. Another thing that we've also got to take into consideration, we've got this week 4 interest rate decisions coming out. Now, even though they're coming out in different economies, one's coming out from Europe, one's coming out from England, and another one's coming out from Canada, what I am going to be looking at is the outlook. Because what I want to see is, I want to see this global outlook. I want to see if things are we're starting to see some type of bottom. I don't think we are starting to see a bottom. And the problem is now that I don't think it's really a problem with the credit markets. I think it's more of a problem with consumer sentiment, with investor sentiment. Buyers are just not coming back into the markets no matter what government officials are doing. So that's the main problem at the moment. I think that's also why we're not receiving this major sell-off. I think investors just don't really know what to do now with their money. We have seen some money go into gold. I've just brought up the gold chart. We can see it right here. It's a daily chart. Now, before I continue, I just want to mention that the charts I'm using are stockcharts.com. We like to mention that on each video that we do. Now, basically, since we gave a signal, a buy signal on this, which was a couple of weeks ago, we've had this nice rally. We've continued higher. We haven't received a rally like I was expecting, because what's been happening at the moment is money's now been dividing into treasuries and gold. We've been receiving some investors going into gold. A lot of the smart money's been going into treasury bonds, stuff like that, especially now as inflation is coming down to virtually zero. So what's happening is that investors are now receiving real high returns on their treasury bonds. Now, over the last couple of trading days, we received this bounce off the 1,000 mark. If we look carefully, this is just a setup that we are looking at the moment. We've got this trend line right here. We've got this channel right around here like that. Now we are looking for a further pullback. I would like to see a pullback to roughly the 910 level, the 920 level, and if we receive a reversal pattern around there, we will be thinking of taking this higher, especially as it should be in line with this once known to be resistance level, could form into a support level. That's something that we are looking at, especially if we're going to receive more pessimistic news from the US. So probably we're going to receive a slight boost in gold. I'm not expecting any major rally, like I told you, because money isn't only going into gold at the moment, it's also going into treasury bonds. One last thing also I do want to show you in this video is the dollar. Now the dollar index, basically it's formed a bullish triangle. If we look at it, we can see this type of bullish triangle. Now, despite Friday's US stock session that did close at new low levels, the dollar index, it didn't really climb higher. We did at first during the session think that we were going to receive a break of this level, of the 88.46 level. But what happened in the end is it just lost its steam. It came back down, closed the session at 88.06. I'm still looking for a break. Now, if we look at the individual currency pairs as well, we can see, and this is something that we did post on the dodjit website under chart analysis. We did post different scenarios, different stuff that we're looking at, trend lines, stuff like that, and breakout patterns. If you look at the chart analysis on the website, you will be able to see that the Canadian dollar, the US dollar against the Canadian dollar, has already broken out. We're looking for a slight pullback on that before we enter again. Basically, yet again, it's to do with the US markets. If the US markets continue lower, we're probably going to receive a breakout. I am looking for a slightly more pullback on gold, and if we do receive a pullback to the 920 area, we receive a reversal candle around there, we're thinking of entering it, especially as it's going to coincide with our trend line support. Regarding the dollar, like I told you, to the upside, looks to the upside at the moment, unless obviously we receive a turnaround in the US markets. That's it for today. My name is Adam from dodjit.com.